What is happening in the crypto world right now? The market is on fire, and we've got the breaking news that you absolutely cannot afford to miss. Get ready for a lightning-fast update packed with critical insights that could shape your next move. The pace is relentless, the stakes are high, and if you're not plugged in, you're missing out. We're diving deep into the stories that are making waves, from massive market shifts to groundbreaking opportunities. Let's go. First up, we're seeing a significant shift as the global crypto market cap takes a hit. But where is the smart money moving? You heard that right. While the giants are consolidating, smaller, high-growth tokens are capturing attention. We're talking about presales that are soaring despite the downturn. What's driving this trend, and could these be the next big breakout plays? We've got the inside scoop. But it's not all smooth sailing. The corporate treasury model for Bitcoin is facing a serious market reckoning. After a period of aggressive adoption, we're seeing stock drops and financing challenges. Is this model sustainable, and what does it mean for billions in corporate holdings? And the volatility isn't stopping. Crypto liquidations are topping $500 million as major coins like Bitcoin, Ethereum, and XRP experience a sharp weekend dip. What's behind this sudden plunge, and what should traders be watching? Plus, we're breaking down why US Spot ETF inflows might signal a strategic buy opportunity you won't want to miss. Stay tuned for all the details and make sure you hit that like, subscribe, and the notification bell so you never miss an update. A steep dive amidst the rush. The global cryptocurrency market has experienced a notable decline, with the total market capitalization plummeting to $3.8 trillion as of August 27, 2025. This marks one of the lowest levels seen in recent weeks, triggering widespread caution among investors. Bitcoin, the undisputed king of digital assets, fell below the crucial $110,000 threshold for the first time since early July. This correction is happening amidst broader sell-offs in risk assets, with many analysts pointing to aggressive profit-taking by institutional investors as a primary catalyst for the downturn. This pullback is a stark contrast to the overall resilience the crypto market has shown throughout much of 2025, a period that had been bolstered by favorable macroeconomic trends and intense speculative trading activity. The current dip, however, signals a significant shift in market sentiment, with traders increasingly looking to rotate out of the high-profile, established assets and pivot towards smaller, high-growth opportunities that promise greater upside potential. Major altcoins such as Ethereum, ETH, Cardano, ADA, and XRP have also reported significant weekly losses, further reinforcing this trend of market consolidation and investor caution. While the major cryptocurrencies are grappling with regaining upward momentum, a fascinating trend is emerging. Certain presale projects are absolutely soaring. Leading this charge is MAGAX, a token currently in its early presale stages, which has already managed to sell an impressive 75% of its allocated Stage 1 tokens. This remarkable achievement comes despite the prevailing market downturn, demonstrating a strong investor appetite for alternative growth avenues. Priced attractively at 0.00027, MAGAX is being eyed by both retail and institutional investors as a potentially lucrative entry point in an otherwise challenging investment environment. What sets MAGAX apart is its innovative AI-driven meme-to-earn model, designed to reward content creators, coupled with robust deflationary tokenomics. These features are helping to differentiate it significantly from traditional meme coins like Dogecoin, which often lack such underlying utility and sustainable economic models. Market analysts are suggesting that these types of presale opportunities often find fertile ground during periods of heightened volatility, precisely because investors are actively seeking out alternative avenues for substantial growth. With Bitcoin and Ethereum entering a phase of consolidation, the spotlight is naturally shifting towards smaller tokens that possess unique utility or innovative structural designs. MAGAX's strategic implementation of AI-driven rewards, coupled with its staking pools and transaction-burning mechanisms, provides a structural foundation that many of the earlier meme coins conspicuously lacked. This potent combination of viral hype and demonstrable technical credibility has been instrumental in its rapid adoption and early success. The broader market dynamics also reveal signs of structural imbalance, with Bitcoin's market dominance currently standing at 56.31%, while stablecoins represent a 7.08% share of the total market cap. These figures underscore the incredibly dynamic and often unpredictable nature of the digital asset sector, where rapid gains can swiftly give way to sharp corrections, heavily influenced by macroeconomic shifts and prevailing market sentiment. But is this the end of the story, or just the beginning of a new chapter? Stay with us as we uncover the corporate strategies that are facing a major test. Corporate Bitcoin holdings under fire. A significant wave of institutional adoption has seen 28 firms collectively purchase a staggering $15.9 billion worth of Bitcoin over the past 2 months. This surge is largely attributed to the continued embrace of Bitcoin as a corporate treasury strategy, a model famously pioneered by Michael Saylor and his company, formerly known as MicroStrategy. The aggregate holdings by these corporations now represent a substantial 4.7% of the total Bitcoin supply, highlighting a growing trend of major companies diversifying their balance sheets and seeking hedges against inflation through digital assets. This strategy involves leveraging equity or debt financing to acquire Bitcoin, positioning it as a strategic asset class rather than just a speculative investment. This approach has also fostered a unique market dynamic, where the valuation of these companies is increasingly tied to their Bitcoin reserves, often measured by metrics like market net asset value, MNAV, multiples. However, this lauded corporate Bitcoin model is now facing intense scrutiny and a potential market reckoning. Strategy Inc., the rebranded entity formerly known as MicroStrategy, has experienced a significant stock drop of 15% in the past month. This decline coincides with a noticeable erosion in the premium traditionally assigned to its substantial Bitcoin holdings. Adding to the pressure, the company's attempts to secure financing have hit roadblocks. A recent offering of preferred stock managed to raise only $47 million, falling far short of the capital required to sustain its aggressive Bitcoin acquisition strategy. This financing challenge is particularly concerning as it comes amidst earlier promises to limit share dilution, a commitment now seemingly challenged by the need to issue additional common shares to fund its ongoing Bitcoin purchases. Industry analysts are increasingly pointing to a confluence of factors, including heightened competition and evolving market conditions, as contributors to the waning premium for corporate Bitcoin holdings. Jake Ostrovskis, a principal analyst at Wintermute's OTC desk, has highlighted that investors are now actively reassessing the long-term viability and sustainability of this model, especially in light of Strategy Inc.'s revised approach to share issuance and its financing struggles. The decline in the MNAV multiple, which currently stands at a modest 1.57, serves as a clear indicator of a significant shift in market sentiment, even within the broader context of general crypto market optimism. The implications of Strategy Inc.'s challenges extend far beyond the company itself. As a foundational case study for the corporate Bitcoin treasury model, its struggles could very well signal a growing wave of skepticism toward the entire approach. If the premium model falters for Strategy Inc., it could trigger a ripple effect across the sector, impacting the valuation of over $108 billion in corporate Bitcoin holdings. This scenario could force a widespread reevaluation of how corporations allocate capital towards digital assets and question the long-term sustainability of Bitcoin as a primary investment strategy. Can these corporate giants weather the storm, or is a fundamental shift on the horizon? Get ready, because we're about to dive into the sharp price movements that are shaking up the market. Weekend bloodbath, liquidations surge as markets tumble. The cryptocurrency market is experiencing a significant downturn, with Bitcoin dropping below the critical $109,000 mark on Friday. This sharp decline has pulled other cryptocurrencies down with it, mirroring a broader dip in stocks and other risk assets as traders digest recent inflation data. The leading cryptocurrency was trading at its lowest level since early July, down nearly 4% over a 24-hour period and an 8% hit over the last 30 days. Earlier this month, Bitcoin had reached an all-time high of $124,128, but it has now fallen approximately 12% from that peak. Ethereum, the second-largest cryptocurrency, has also seen a substantial drop, erasing its gains from the past 7 days after recently breaking its 2021 price record. Trading at nearly $4,295, ETH is down 6% in the last 24 hours and about 13% since its recent record high of $4,946. This widespread price decline has had a severe impact on futures traders who were betting on upward price movements. According to CoinGlass data, over the past 24 hours, a staggering $446 million in long positions have been liquidated across all cryptocurrencies. When including short positions, the total liquidations across all types of trades have reached $535 million. Other major cryptocurrencies are also feeling the heat. XRP, the third-largest digital asset, plunged by 6% to trade around $2.84. Solana experienced a 3% drop, falling to $209 after reaching a 6-month high above $217 just a day prior. The catalyst for this widespread market dip appears to be the release of the Personal Consumption Expenditures Price Index on Friday, which showed core inflation running at 2.9% in July. While meeting estimates, this figure was higher than June's reading, signaling persistent inflationary pressures that often lead to tighter monetary policy and reduced risk appetite. The correlation between crypto and traditional equities is becoming increasingly apparent, as stock markets also reacted negatively. The S&P 500 dipped 0.6% lower, and the Nasdaq lost 0.9%, demonstrating that both asset classes are sensitive to the same macroeconomic indicators. Analysts are cautioning that September, historically a challenging month for both Bitcoin and stocks, could see even steeper sell-offs. Despite the current downturn, some market participants remain optimistic. Users of Myriad Markets, a platform associated with Bitcoin Bulletin's parent company, DASDAN, still believe that Ethereum has a 75% chance of rebounding to a new all-time high of $5,000 by the end of the year. As the market navigates these turbulent waters, what strategic opportunities might be emerging from the chaos? Prepare yourself, because we're about to explore the institutional perspective on buying the dip. Spotlight on strategy, the ETF effect. The increasing institutionalization of Bitcoin is a defining trend of the current market cycle, and the recent surge in US Spot ETF inflows is a significant indicator of this shift. These inflows represent a strategic buy opportunity for investors looking to gain exposure to Bitcoin through regulated financial products. The approval and subsequent performance of these ETFs have opened the doors for a broader range of investors, including traditional asset managers and retail participants, to allocate capital to the digital asset, marking a pivotal moment in Bitcoin's journey towards mainstream financial integration. The sustained demand for Bitcoin ETFs suggests a growing conviction among institutional players about the long-term value proposition of Bitcoin. This demand is not only driving up the price of Bitcoin, but also solidifying its position as a legitimate asset class within the global financial landscape. Analysts are closely monitoring these inflows, viewing them as a key metric for gauging institutional sentiment and predicting future market movements. The consistent buying pressure from ETFs can help to stabilize Bitcoin's price and reduce its notorious volatility, making it a more attractive option for a wider array of investors. Furthermore, the structure of these ETFs ensures that for every share created, a corresponding amount of actual Bitcoin is purchased by the fund. This direct correlation means that increased ETF demand translates directly into increased on-chain demand for Bitcoin, effectively absorbing supply and potentially driving up the price. This mechanism provides a clear and transparent way for institutional capital to enter the market, contrasting with the more opaque methods of the past. The competition among ETF providers has also led to innovative product offerings and fee structures, further enhancing accessibility and appeal for investors. The broader implications of this institutional embrace are profound. It signifies a maturing market, where regulatory clarity and established financial products are paving the way for wider adoption. As more capital flows into Bitcoin through these regulated channels, it not only enhances liquidity, but also lends greater credibility to the asset class. This trend is expected to continue as more institutions recognize Bitcoin's potential as a store of value, a hedge against inflation, and a component of a diversified investment portfolio. The strategic implications are clear. For those looking to position themselves advantageously in the evolving financial landscape, understanding and potentially participating in the Bitcoin ETF market is becoming increasingly crucial. So, are these institutional moves a sign of lasting strength or a temporary trend? Stick around as we wrap it all up with a quick recap of today's biggest stories. And that's a wrap on another explosive day in crypto. We saw Bitcoin dip below $110K, leading to massive liquidations, while the innovative MAGAX presale defied the downturn. Corporate Bitcoin strategies are facing new scrutiny, and US Spot ETFs are signaling a potential buying opportunity. Don't miss out on the next wave. Hit that like button if you found this valuable, subscribe for more daily insights, ring that notification bell so you're always the first to know, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time updates. We'll see you tomorrow.